Trading tip of the week: correlations. Understanding correlations between asset classes can offer an advantage. Which ones have got an inverse relationship, which ones have got a positive relationship. Now, the majority of these aren't set in stone, so they can break from time to time, especially when the central banks are involved. But in general, you do see that risk on, risk off. So it's important to understand that and know which asset classes are considered risk on, which ones are considered risk off, and just keep an eye on them. And whatever you're trading, there's going to be other products that are closely related to that. Keep an eye on them as well, because sometimes they can move before your one does. It gives you that little head up. You can get in at a much better price. So there's always an edge to be had. You just got to try and find it. So that's about it for the macro and the markets at the moment. Obviously, the ECB is going to be the highlight of this week. They're going to need to come out with something strong. If they don't, then just watch the euro. It could really nosedive. Again, just what could happen. I'm not saying it's going to happen. Okay, so the technicals. So just a reminder, or in case you're new to watching our YouTube channel, the black numbers in the right-hand column are just simply the support and resistance levels. Brown numbers are for breakout, so it's a resistance, but if it pops through, then it becomes a breakout trade where you would expect it to keep going. If it was a support and it breaks through, you would expect it to keep going lower. Claret numbers, I guess that claret, I'm not really sure color wise, but that's just providing areas where I've identified where there's rejection, whether it's support or resistance. Could be based on double or triple tops or bottoms, or just where I see that myself as areas of strength in the market. So the first one we're going to start with now is the Dow Jones. And stocks ended the week pretty much on the lows of the week. Friday's NFP rallied them, but they failed and they got rejected at R2 and came back again. So with the Dow at the moment, I've got a higher resistance level, much higher really, but you never know in these markets, at 34,029. A lower resistance level at 33,293. Again, it doesn't look as though it's going to threaten that for the moment. Supports at 31,186. And then if we move on to the on the 30-minute, again, as you can see, those pivot point levels are on there. And you can see on Friday where, after the data, it spiked up. It held there for a while. And then it just got sold all the way off. So it went from R2 all the way down, even popped through S1 and closed pretty much at S1. So on the 30-minute chart, I've got resistance at 32,129 and support at 31,163. Again, Monday's going to probably be fairly quiet, but as we head towards the ECB, Powell speaking and all that, these levels, some of them will definitely come into play and some of them will definitely get broken. Just remember, the Dow is the industrial stocks. Now we're going to move on to the S&P. This is the top 500 stocks in the US. So here on the daily, I've got resistance at 43.03, which is, it's been in there for all the ways back from April, May time. It's been my major level, actually. And I love the fact that the market had that bounce and it got back up to there. I bought the 4,300 put options, which gives me the right to be short there. And obviously it's a great trade now, but I always felt that it was going to be a great trade. I've been waiting for, months basically for it to get back up there to test that level because it was a great selling opportunity. And then below that, we've got the 41.48. Support on the daily is at 39.12. Below that, 37.36. On the 30-minute, I've then got at 4,017 and support at 39.05. Again, just keep an eye on these, with everything that's going on, Fed speakers and all that, these could get punched through quite easily this week. Now, Nasdaq resistance here on the daily is 13,558. Again, it goes back to those old highs of April, May. And then I've got a lower one on that descending trend line there, 12,894. Support is 12,033. I'm not too strong on that support, so just be a little bit careful of that. And then 11,479 below that. Again, just taking in previous support levels where the market's bounced from. And then when we look at the 30-minute, got a couple of resistance levels on there. So 12,000 and then all the fours, 444. And then below that, 12,292. Support level is at 12,024. Of course, remember, Nasdaq is all about the tech companies, and then we move on to the Russell. It's all about the small and mid-cap stocks. And in case, they're much more sensitive to having to pay more for their loans. They're more sensitive to consumers cutting back on their purchases, depending on what sort of industry the companies are in. So on the daily, I've got resistance at 1948. Support at 1797, so pretty wide, but the market's much closer to the downside there. And then moving on, 30-minute, again, you can see from the pivot points on Friday, they worked really, really well. It actually went up and tested R1. It failed there, came down through the pivot quite easily, and then went down to test S1. Great day trading. Great for day trading. And now we're on the 30-minute, so the fresh levels there, 1849, 1821, and support at 1798. If you're into currencies, so just looking at cable, so that's the pound against the dollar. Any idea why it's called cable? Can't hear you, so I'll have to tell you anyway. And it's because many decades ago, when London and New York established themselves as financial centres, they actually ran a cable all the way across the sea, so they could connect the two centres together, the two capitals, so that they could actually get their business processed faster, and it was much more reliable. It's still there. I'm not sure how much it's used these days, because obviously we've advanced just a little bit since then. Okay, so we're looking at cable. Again, just remember, as I've been reminding you at least the last 2, possibly 3 weeks of these YouTubes, be careful about trying to buy this. The dollar's in such a strong place because America's in such a strong place. Okay, we're getting a new prime minister tomorrow. It might give it a little bit of a bounce, but don't get sucked in. Be cautious, be careful, because what could happen is that, unless they come out with some good stuff, the economy is still in a very bad place in the UK. It's not dire, and when I go around the shopping centres, yes, people have got bags of shopping, but how much of that are they having to borrow? How much of that are they earning? How much of that can they afford? So just be a little bit careful still. So resistance levels on the daily, I've got 123.45, which is obviously way away. 121.53, which is away, but with the new Prime Minister coming in, let's just wait and see. Final resistance level is 118.31, which is obviously closer, and support at 114.91. Moving on to the 30-minute here, I've got resistance at 115.86 and support at 114.96. The euro against the dollar, again, you know, there's just not much in the way of good news coming out of the eurozone either at the moment. So again, be cautious. But again, on Friday when I come up to it, I'll explain, you know, there was a good trading opportunities there. So looking at the daily, we've got resistance at 102.45, resistance at 100.88, support at 99.17, that's 0.9917, and support at 0.9888. And the trading opportunity that presented itself on Friday, it came up and tested that R1 level, lovely, sort of around the data time and in the early afternoon. It was a great selling opportunity. And of course, then the market did sell off from there. So today on the 30-minute, I've got resistance pretty much at that level at 100.39. Support is lower down at 0.9952 and 0.9917. So the 9917 is the same for the daily as it is for the 30-minute. You know, with ECB meeting this week, it's got to be a case of go big or go home, as far as I'm concerned. You know, if they don't go big, then just watch that euro. It could really get bashed. You know, I'm not saying that because I'm short of it. I'm not saying that because I don't believe in it, which I don't, but that's besides the point. You know, I'm just looking at the technicals here. I'm looking at the fundamentals. And with the power pressure, with Russia, the invasion of Ukraine, impacting inflation, impacting power, you know, is that going to get resolved quickly? I don't think so. And, you know, you just can't switch over and find all this new power to replace the Russia that quickly. You know, hopefully it will get resolved. You know, hopefully the war will get resolved, let alone the power situation. But, you know, just got to be a little bit careful of the situation with the euro and with the pound at the moment. Be very, very cautious if you're considering buying them. I'm not saying that there's not going to be opportunities, but you know, just be really careful and be disciplined if it goes against you. Okay, so now on to Bitcoin. So, you know, Bitcoin's just been sort of ranging, really. Again, so we've got this sort of old level in case there is a massive breakout on the upside, which is at 27,400, although I don't see that at the moment. And then I've got a lower resistance level in at 23,409. Supports all the way down at 18,505. And then when we look 30-minute, here we've got resistance at 20,395 and support at 19,516 and 19,345. So still loose correlation in between Bitcoin and Nasdaq. Just remember, it is loose. It's not perfect. As you can see, you know, usually it's Bitcoin that's that more erratic, that more aggressive and volatile. But look at the stocks. I mean, they seem to be having more of a up and down than Nasdaq. Than Bitcoin at the moment. Bitcoin's sort of been almost ranging. Okay, it's a couple of $1,000, but still, it's just been ranging. And of course, as I mentioned earlier, the ETH merge is happening soon, so that may be taking a little bit of attraction away from Bitcoin just for the moment. Moving on to gold. So again, that's been having a downward movement this week. Okay, I'm just going to not be too over opinionated on gold, but when we look at it, we've got resistance at 1772, got resistance at 1724 at the moment, and support at 1678. And then when we move to gold 30-minute, I've got resistance at 1724 again, which sort of coincides with the daily one. But again, it's very tight on those prices. So, you know, we could see it break out of that very quickly because I've got support at 1720 as well. So I would expect one of them to get broken very quickly. Okay, and last but definitely not least is oil. So when we look at the daily here, the resistance is 98.34 and then 96.40 below that. Support 85.92 and 81.28. So they're very wide, but you know, oil can do $10 in a day sometimes. I've definitely seen that. But let's go on to the 30-minute because that will find some more closer levels. And here I've got 87.74 as resistance, and I've got support at 86.68 and 85.92 as well. So let's just see if they hold in and which ones will. All I can say is have a great week. If you're going to trade on Thursday, just be careful with the ECB meeting. It's going to be interesting, shall we say. You know, general census is 50, 75 points, but let's wait and see. You know, it's going to be a lot more about what they've got to say as well as what they're going to do, you know, what they plan for the future as well there. And then we're just going to move on. And also after the ECB meeting at 5 o'clock in the evening, UK time, I would be doing my monthly webinar with our friends at Finaco Bank. This one's all about a trading plan, you know, and what to include. I'll be posting on LinkedIn and we'll be posting on websites as well, such as our Instagrams, etc., with the link for that in case you'd like to join that and hear me go on about sort of how to build a trading plan and what to include. I'll also obviously cover the ECB's as well. Briefly, just, you know, what we provide in the way of services. So of course this YouTube, which, you know, hopefully it helps to prepare you for the week going forward. And then what we also provide is a daily newsletter. Now with that you're getting global news, up-to-date global news, views from me as well, and also you're getting fresh daily chart levels and fresh daily pivot points as well. And there's the link for you to sign up for the newsletter. And then of course we do one-day workshops, 1-week courses, and we do our full-blown industry leading masterclass, which is trading. So it's an accredited course. It's the financial and commodity markets trading masterclass. It's a great course. It can be broken down into weeks. You don't have to do the whole course in one time. If you pass the exam at the end of it after you've attended the 4 weeks, and also a challenge we set, then, you know, we're looking for traders. We're always looking for new quality traders. If you can do all of that, then we're quite happy to offer you a position on the Symax prop trading desk. Going back to trader mentoring as well. So for some of you that are already trading, I provide services where I can help you to actually obtain that next level and time again. Consulting, we consult companies, help them with hedging, help them with risk, and of course we provide trader education to exchanges and brokers. So if you would like to reach out to us, any information, details on anything I just mentioned, info@symaxfintech.com. If you've got any questions that you'd like to aim personally at me around trading, then my email address is chris.tubby@symax-int.com. Have a great week and hope to catch you again next Monday. Bye for now.